Hello, I am Shannon Ballman Theis, the Payroll Queen. And today we are going to explore the New York W-4 equivalent, which is also called IT-2104. So I am going to share my screen here. It looks like you are looking at the New York State Department of Taxation and Finance employees withholding allowance certificate for New York State, New York City, and Yonkers. It starts out with the exact same thing that almost all of the other W-4 equivalents ask for, which is the first name and middle initial, last name, permanent home address, city, village, or post office, state, zip code, and social security number. Status, which is single or head of household, married, married but withhold at the higher single rate. If married but legally separated, mark an X in the single or head of household box. And some New York specific things. It asks if you're a resident of New York City. This includes Bronx, Brooklyn, Manhattan, Queens, and Staten Island. You mark yes or no. Are you a resident of Yonkers? You mark yes or no. The reason that it asks these questions is because there are local resident and non-resident taxes for people who live in those areas. And this next part, before making any entry, see the notes below. And if applicable, complete the worksheet in the instructions. 1, total number of allowances you are claiming for New York State and Yonkers. If applicable, is the line 19 if using the worksheet. And 2, total number of allowances for New York City, line 31 if using the worksheet. Use lines 3, 4, and 5 below to have additional withholding per pay period under a special agreement with your employer. There's a New York State amount, a New York City amount, and a Yonkers amount. And if you accidentally if you're not a New York City resident and instead of filling in the New York State amount in the New York City amount, your employer will hold a New York City amount. Ideally, they should kick this back to you and say, hey, you're not a New York City resident. I think you need to make a correction here, but that does not always happen, especially if your employer is using automated service where you fill this out in the payroll software. And then you certify that you are entitled to the number of withholding allowances claimed on the certificate. A penalty of $500 may be imposed for any false statement that decreases the amount of money you have withheld from your wages. And you might also be subject to criminal penalties, and you sign and date. And the employee instructions are to give this form to your employer and keep a copy for your records. Remember to review this form once a year and update it if needed. And I like that this W-4 equivalent reminds the employees to review the form once a year and update it if needed, because a lot of times I'll be reviewing and getting a case that has really old signed W-4s. And so many times the people's situations have changed a lot, especially if it's a younger employee. You can get married, have kids, get a divorce, or your kids grow up and they're no longer a dependent. You need to update this because it's going to change the amount of taxes that are withheld. And there's a note: single taxpayers with one job and 0 dependents, enter 1 on lines 1 and 2 if applicable. Married taxpayers with or without dependents, heads of household, or taxpayers that expect to itemize deductions or claim tax credits, or both, complete the worksheet in the instructions or scan the QR code below to get to those instructions, because you want to make sure that the number of allowances that you're claiming is going to get you as close to zero of tax due or refund as possible. That's the whole purpose of filling out these W-4 equivalents. And the employer instructions here is to keep the certificate with your records. If any of the following apply, mark an X in each corresponding box, complete the additional information requested, and send an additional copy of this form to New York State. See employer in the instructions on tax.ny.gov, search IT-2104 dash. I can't tell if that's a 1 or an I, but looking at it, it's definitely an I, or scan the QR code below. A, employee claim more than 14 exemptions allowances for New York State. B, employee is a new hire or a rehire. First aid employee performed services for pay. See box B, instructions. You may report new hire information online instead of mailing the form to New York State by going to nynewhire.com. Note, the employers must report individuals under an independent contractor agreement with contracts in excess of $2,500 using the online reporting website above, not Form IT-2104. Are dependent health insurance benefits available for this employee? Yes or no? If yes, enter the date that the employee qualifies. And then if this form is also being used to report the new hires, the employer must add their employer name, address, and their employer identification number. Okay, so here are the instructions for Form IT-2104. It's to be completed by you as an employee and given to your employer to instruct them on how much New York State, New York City, and Yonkers tax to withhold from your pay and to send to this New York State Tax Department on your behalf. Your employer will use the information you provide on this form, including residency, marital status, and allowances to withhold those tax. Lowers the amount of income tax your employer must deduct from your paycheck. A larger number of withholding allowances means a smaller New York income tax deduction from your paycheck, and a smaller number of allowances means a larger New York income tax deduction from your paycheck. If you are claiming single with zero allowances, you will have the most amount of taxes withheld from your paycheck. If you are claiming married or had a household with a number of exemptions, you will, or allowances, you will have the lower amount of taxes withheld from your paycheck. And changes effective beginning 2023. And yes, these are the 2025 instructions. Has been revised for tax years beginning after January 1st, 2025. If you previously filed Form IT-2104 prior to January 1st, 2023, and used the worksheet or charts, it's recommended that you should complete a new IT-2104 and give it to your employer. So who needs to file this form? If you have life changes, you are no longer a dependent, you get married, you become divorced or legally separated, you have a child, you move into or out of New York City or Yonkers. If your income changes, if your wages increase and you expect to earn more than $107,650 or more during the tax year, the total of your income and your spouse's income increases to $107,650 or more for the year, or if you significantly have more or less income from other sources or from another job, including self-employment. If you change your job, if you're a covered employee of an employer that has elected to participate in the employer compensation expense program, if your tax situation changes, if you itemize your deductions on your personal income tax return, you're eligible for New York State credits such as earned income, child and dependent care, or college tuition credits. If you owed tax or received a large refund when you filed your personal income tax return for the prior year, or if you no longer qualify for exemption from withholding. IRS advised you that you are entitled to fewer allowances than claimed on your original federal W 4, which was submitted to your employer, or if your W 4 is from tax year 2019 or earlier and you claimed the disallowed allowances on your original form IT 2104. So I like that it tells you what the changes are for tax year 2019 or earlier and 2020 or later, because 2019 and prior, the W 4 that you filled out federally also worked for your state. A lot of people didn't even know that state W 4 equivalents existed because they both had allowances on it. And now the federal W 4 just has your marital status, and it's got a whole other section where you can calculate different things. In tax year 2020 is when the federal W 4 changed. So there was a lot of people that had no idea that states even had W 4 equivalents. And so a lot of people, myself included, prior to 2020, had never filled out the state equivalent of the W 4. But it became required for by a lot of employers and payroll software companies that state W 4 was filled out beginning in tax year 2020. So how often to submit a form IT-2104 to your employer? When you start a new job, you have to complete a IT-2104. You should review your form submitted for each job that you have every year whenever your tax liability changes and you need to update the number of allowances you make that you may claim. You should submit a new IT-2104 to your employer, claiming the correct number of withholding allowances. So to calculate the withholding allowances you want to claim in part 1 and part 4 of the worksheet. So here is the worksheet. So number 6, enter the number of dependents that you will claim on your state return. Do not include yourself or, if married, your spouse. This is just the number of dependents that you have. And then for lines 7, 8, and 9, you'll enter a 1 for each of the credits that you expect to claim on your state return. So that would be the college tuition credit, New York State household credit, or real property tax credit. For lines 10, 11, and 12, enter 3 for each credit you expect to claim on your state return: child and dependent care credit, earned income credit, Empire State child credit, New York City school tax credit, or other credits. There's more instructions. I'm not gonna go that deep into this because I try to keep these fairly short. Um, 15, head a household status and you only have one job, enter 2. 16, enter an estimate of your federal adjustments to income, such as deductible IRA contributions that you will make during the tax year. The total estimate, divide this estimate by 1,000, drop any fraction, and enter the number. So let's just keep it simple. If you're going to have 10,000 of deductible IRA contributions, you'll divide 10,000 by 1 and come up with 10. And that is the number that you would enter in. But if it was, 12,000, you would divide that by 1,000 and you'd get 12 point something. And you would just enter 12. 17, if you expect to be a covered employee of an employer who elected to pay the employer compensation expense tax in 2025, complete part 3 below. and enter the number from line 28. And that is this section down here. And so the expected annual wages and compensation from electing employer in 2025, line 24 minus 40,000. If 0 or less, you stop. If that number was still above 0, line 25 multiplied by 0.05, then line 27, you'll take line 26, divide by 0.935, divide line 27 by the number 65, drop fractions, and enter in line 17 above. That might sound pretty confusing, but honestly, if you start putting numbers in and just do each line, think of it as each line as just one thing, and you start going through it, I promise it'll make a lot more sense once you start doing it versus just reading through it. Line 18, if you expect to itemize deductions on your state tax return, complete part 2 below and enter the number from line 23. All others, enter 0. So part 2, you complete only if you're going to itemize the deductions on your state return. So line 20, you will enter your estimated New York itemized deductions for the tax year. A lot of times what I've seen people do is if they're filling this part out, they'll just take their estimated or their itemized deductions from the prior year if they expect them to stay the same. Based on your federal filing status, enter the applicable amount from the table below, and we click that, and you've got, if you're head of household, it'll be 11,200, married filing separate, 8,000, married filing joint, 16,050, and then line 22 is subtract line 21 from 20. If 21 is larger than 20, enter 0 on line 18 above. If it is not 0, divide line 22 by 1,000, drop a fraction, and enter the result on line 18 above. And 19, you're going to add lines 16 through 18 and enter the amount from line 19 onto of the IT-2104. Okay, so now that we've completed the worksheet, let's go through the rest of these instructions. Allowances you may not claim. You may not claim a withholding allowance for yourself or, if married, your spouse. If you have more than one job, you have to file a separate IT-2104 certificate with each of your employers. Be sure to only claim the total number of allowances that you are entitled to. If you claim all your allowances at your higher paying job and 0 allowances at the lower paying job, your withholding will better match your total tax liability. I like how they give you this hint, because a lot of times people are going to claim all of their allowances at all of their jobs, and that doesn't really take into account that your tax liability at your lower job, your tax liability is going to be much less, possibly 0 if you claim all of your allowances. But when both of your jobs get added together, it could put you in a higher tax bracket. So you want to make sure that if you have more than one job, claim all your exemptions at your higher paying job and don't claim all of your exemptions on your lower paying job. When I had 2 jobs in the past, my second job or my lower paying job, I would claim a single 0. And at my higher paying job, I would claim head of household and my number of allowances, because that is what worked out best for me when it came to not owing and not getting a very big refund at the end of the year. If you're a dependent of another taxpayer and you expect to earn more than $3,100, you should reduce your withholding allowances by 1 for each $1,000 of income over 2,500. This will help make sure that your employer withholds enough tax. If you calculate a negative number of allowances or less than zero, see claiming negative allowances or additional withholding amounts, which is going to be covered a little bit later. So if you're head of household with only one job, you should claim the head of household filing status on the IT-2104 only if you are going to also be claiming head of household on your state income tax return. If you have only one job, you may also choose to claim 2 additional withholding allowances on line 15 of the worksheet we already covered. But if you're single or head of household with 2 or more jobs and the combined wages from all of your jobs is under $107,650, reduce the number of allowances by 7 on line 1 and 2, if applicable, on the certificate you file with your employer for your higher paying job. If you calculate a negative number or less than 0, see claiming negative allowances, which again we will cover a little bit later. If you are single or head of household and your combined wages from all of your jobs are between $107,650 and $2,263,265, use the charts in Part 6 and enter the additional withholding amount from the chart on line 3 of the IT-2104. Married couples with both spouses working should each file a separate IT-2104 certificate with your own respective employers. If the higher wage earning spouse claims all of the allowances the couple is entitled to, and the lower wage earning spouse claims 0 allowances, your withholdings will better match your total tax liability. Do not claim more total allowances than you are entitled to. If your combined wages are less than $107,650, you should each mark an X in married but withhold at higher single rate box on the certificate and divide the total number of allowances that you calculate on line 19 and line 31 of the worksheet between you and your working spouse. Let's say both spouses earn roughly the same amount and they have 5 total allowances that they can claim on box 19 or line 19 or line 31 of the worksheet that we already covered. Then one person's going to claim 3, one person will claim 2. But let's say one person earns significantly more than the other spouse. You'll have to figure out what's going to work out best for you, but one person might want to claim all 5, one person might claim 0, one person might claim 4, one person might claim 1. The point that I'm trying to make is that in this fictitious example, there is a total of 5 allowances that both spouses can claim. So they should not both claim 5 on their IT-2104 because they'll be claiming a total of 10, and that is not allowed. Because what'll end up happening is you'll owe a lot more when you file your income tax return if you split the exemptions or allowances between you. And if you earn more than 107,650 or more, then you use the chart on Part 5 and enter the additional withholding amount on line 3 of Form IT-2104. Married taxpayers with 2 or more jobs and the combined wages from all of your jobs is 107,650 or more, use the chart in Part 5 and enter the additional withholding amount from the chart on line 3. If you're going to claim more than 14 allowances, your employer must send a copy of your Form IT-2104 to New York State Tax Department. They'll investigate, and you may be asked to verify your allowances. The tax department will review your certificate and notify your employer of any adjustments that must be made to either the filing status or number of withholding allowances permitted or both. So only claim 14 allowances if you can back it up, because chances are pretty good that New York State Tax Department is going to investigate and send a new amount to your employer. I don't know that there's anything super bad that'll happen, but why risk it? If you use the worksheet and calculate a negative number of allowances on lines 1 or 2, and your employer cannot accommodate negative allowances, enter 0 and see additional withholding amounts. Most of the employers are going to be using automated payroll software that cannot accommodate negative allowances. I'm actually not aware of a software that can accommodate negative allowances. If you are aware of one, please drop it in the comments, because I'm always looking to find out that information. If you have more than $1,000 of income from other sources other than wages, such as self-employment, interest, dividends, alimony, and do not make estimated tax payment for that income, you're going to want to reduce the number of allowances claimed on line 1 and 2, if applicable, on the form by 1 for each $1,000 of non-wage income. If you calculate a negative number of allowances, see the claiming negative allowances, which again, we will get to. And if you have significant amounts of non-wage income or income that's not reported on a W-2, you may also consider making quarterly estimated tax payments directly to the tax department. But a lot of times, instead of making quarterly estimated tax payments, I'll suggest having additional amounts withheld that would equal those quarterly estimated tax payments. And so here's a little chart on claiming other credits. And it's if your New York adjusted gross income is, if your New York adjusted gross income is any of these numbers, and you're single, had a household, married, then you divide the amount of expected credit by any of the numbers in this column. So 60, 68, 96, 100, 110. That's how you'll come up with the additional withholding allowances that you will put on the form. And it gives you an example. If you are married and you expect your New York adjusted gross income to be less than $323,200, in addition, you expect to receive a flow through of an investment tax credit from the S corporation of which you are a shareholder. The investment tax credit would be $160. Divide the expected credit by 60, and that equals 2.6667. The additional withholding allowance would be 3. So you would enter 3 on line 14. And additional withholding amounts, if you can ask your employer to withhold an additional amount, which I mentioned a minute ago. In most instances, if you calculate a negative number of allowances and your employer cannot accommodate that, you should ask to withhold these amounts. So for New York State, line 3, an additional $1.85 withheld per week. For New York City, line 4, an additional 80 cents of tax withheld per week. And Yonkers, an additional 16.75% of the New York State amount. The additional amounts provided in these instructions or calculated through the charts in Part 4 or 5 are accurate for weekly payroll. Therefore, if you are not paid on a weekly basis, you will need to adjust the amounts that you calculate. For example, if you're paid biweekly, double the amounts that you calculated. That's going to give you a little bit less, because biweekly is 26 times a year. Weekly amounts, because you're getting paid biweekly, that's every 2 weeks. So doubling that will work. Avoid under withholding. with Form IT-2104, together with your employer's withholding tables, is designed to make sure that the correct amount of tax is withheld from your pay. If you don't have enough tax withheld during the year, you may owe an additional tax when you file your return. And the tax department will charge you interest and may impose penalties in certain situations in addition to the tax that you owe. Even if you do not file a return, we may be determined that you owe personal income tax. In that case, the tax department must add interest and applicable penalties to the amount of tax that should have been paid during the year. Exemption from withholding. You cannot use IT-2104 to claim exemption from withholding. To claim exemption from income tax withholding, you must file one of the following with your employer: IT-2104E, which is a certificate of exemption from withholding; IT-2104IND, New York State Certificate of Exemption from Withholding; or IT-2104MS, New York State Withholding Exemption Certificate for Military Service Personnel. To determine if you are eligible, you have to see the instructions on the website tax.ny.gov. This is different from a lot of other state withholding report returns because a lot of them is a checkbox that you say that you're exempt from withholding. You have to certify that you're exempt from withholding, and there's a lot of other qualifiers, which I'm sure there are in New York as well. But it's on New York, it is a completely separate form than the IT-2104. So the employer's instructions, box A: if you are required to submit a copy of the employee's Form IT-2104 to the tax department because the employee claimed more than 14 allowances, mark X in box A and send a copy of the IT-2104 to NYS Tax Department Income Tax Audit Administrator, Withholding Certificate Coordinator, WA Harriman Campus, Albany, New York, 12227-0865. If not using the U.S. mail, see publication 55 for designated private delivery services. And I recommend just using the U.S. mail. If the employee is also a new hire or rehire, see box B instructions. The box B instructions are to mark X in box B if it's a new hire or a rehire. Enter the first day that the employee performs services for which the employee will be paid wages, commissions, tips, or any other type of compensation. Mark X in the yes or no box, indicating if dependent health insurance benefits are available to this employee. If yes, enter the date the employee qualifies for coverage. And it has to be submitted within 20 days of hiring. Then it goes to a different address if you're mailing it, but you can also submit it online instead. And I recommend just submitting it online. And that is ynewhire.com. And if you are mailing it because the employee has claimed more than 14 allowances and they were hired in Q1, it's due April 30th. And most of the W-4 equivalents are due, even if it's even if they're claiming more exemptions than the state or the IRS thinks that you should, or they want to look at it if you're claiming more. Most of those are due within the 20 days, which is what the new hire is required to be submitted within. But New York does it quarterly, and it follows the regular quarterly filing deadlines. That is super handy. Now we're back to the worksheet that we already covered, and then there's some tax tables here for additional withholding amounts. Yeah, if you have any questions, let me know in the comments and I will answer you as best I can. I'm always looking at the comments of all of my videos, no matter how old they are. So if you see this 3 years from now and leave a comment, somebody will reply. Thank you for watching.